Good morning and welcome to Dark Gamma's pre-market analysis for Monday, March 23rd. We are opening with a significant bullish gap this morning, the SP 500 currently sitting at 6,598.6. That is a gap up of over 92 points from Friday's close of 6,506.48. Now here is the tension in this setup. Max Pain is all the way up at 6,730, while the upper bound of today's expected move sits at just 6,604.2. The market has gapped right into the ceiling of its expected range, and that tells us today could be defined by compression and resistance rather than continuation.
Exactly, Samantha, and that gap deserves serious attention. We are talking about a 1.42% overnight move, and we are now trading essentially at the top edge of that expected move band. The full range Dark Gamma is projecting runs from 6,408.8 on the downside to 6,604.2 on the upside. So right now, price is pressing against the upper boundary before the opening bell even rings. The options market is telling us the smart money did not price in a gap this aggressive, which means gamma exposure near this level could start working against the bulls as dealers hedge into strength.
And that gamma exposure dynamic is critical to understand here. When price runs to the edge of the expected move this early, we often see the market stall or even mean revert through the session as that overhead supply kicks in. Max Pain at 6,730 is still over 130 points away, so there is a gravitational pull higher in theory, but getting there in a single session against this kind of implied volatility pricing would be an extraordinary move. Traders should be watching whether we can hold above 6,550 on any early pullback. That becomes your first line of support.
On the sector side, the picture is mixed and honestly a bit cautious despite the headline gap. Financials are the top performer this morning, up just 0.18%. That is a very modest lead, but the real story is utilities getting absolutely crushed, down 4.06%. That kind of rotation out of defensives into risk assets would normally support a bull case. But the magnitude of that utilities drop suggests something more disruptive, maybe repricing in the rate or credit space. Worth watching throughout the session.
And then there is the Magnificent Seven, which is flashing a clear warning sign this morning. Every single name in that group is trading lower in the pre-market. We have Apple down 0.39%, Amazon down 1.62%, Microsoft down 1.84%, Alphabet down 2%, Meta down 2.15%, Tesla down 3.24%, and Nvidia leading the losses at down 3.28%. These are the names that have carried index performance for years, and seeing broad-based weakness across all seven simultaneously on a morning when the index is gapping higher is a significant divergence that traders cannot ignore.
That divergence is the headline within the headline today. The SP 500 is floating on that gap, but the engine underneath, the mega-cap tech complex, is pointing lower. That kind of disconnect historically does not last long. Either the index gives back some of that gap as the session develops and tech drags it lower, or buyers step in aggressively on those Magnificent Seven names and we see a genuine intraday reversal. Either way, the 0 days to expiration crowd is going to have an active morning with open interest stacked at this range boundary.
Bottom line for the Dark Gamma community, respect the gap, but do not chase it blindly. We are at the top of the expected move, Max Pain is far above, the Magnificent Seven are universally weak, and sector leadership is thin. The levels to watch are 6,604 on the upside as the expected move ceiling, 6,550 as near-term support, and 6,408 on the downside if this gap fades hard. Stay disciplined, stay data-driven, and we will be tracking all of it live. Let's have a great session. Across the board, the Magnificent Seven are flashing red in pre-market, with losses ranging from roughly 0.4% for Apple, all the way to over 3% for both Tesla and Nvidia, painting a broadly risk-off picture for mega-cap tech heading into the open. The collective weakness suggests institutional players are rotating out of high beta names, and the pressure is concentrated heavily in the AI-adjacent and growth-sensitive tier.
Apple is clearly the relative outperformer here, shedding less than 0.5%, which signals it's being treated more defensively compared to its peers right now. On the other end, Nvidia is down over 3% alongside Tesla, And that Nvidia move is notable given how sensitive it is to any shifts in AI spending sentiment.
Interestingly, the news around agentic AI storefronts and accelerated cloud migration deals points to continued enterprise investment in AI infrastructure, which could provide a narrative floor for names like Nvidia if that optimism filters into the session. However, pre-market open interest in put contracts suggests traders are not fully convinced the dip gets bought aggressively at the open.
Alphabet and Meta are each down roughly 2%, reinforcing that the advertising and AI platform names are facing coordinated selling pressure rather than any stock-specific headline risk. The overall tone for the tech sector today looks cautious, and traders should watch whether Apple's relative strength holds as a leading indicator for any intraday stabilization.
Today's pre-market spotlight is on Mobilicom in the technology sector, carrying a massive $150.6 billion market cap and a beta of 2.15, meaning it moves roughly twice as hard as the broader market on any given session.
That elevated beta is worth watching closely given where the SP 500 has been trading lately. And with WeRide sitting on a staggering expected move of 962.5% alongside Lithium Argentina at 731.7%, the smaller names could see explosive volatility today.
Shifting to tomorrow's pre-market, Smithfield Foods leads with a $9.1 billion cap and the lowest beta of the session at 0.42. But that 162.7% expected move tells us the options market is still pricing in a meaningful earnings reaction despite its defensive consumer profile.
After the close tomorrow, all eyes will be on GameStop, with its $10.1 billion cap holding the highest valuation in that session. And while its beta of 0.6 and expected move of 23.4% look modest, AAR at 85.5% and KB Home at 90.5% expected moves could generate serious open interest positioning and gamma exposure into the print.
The AI theme continues to drive early sentiment with DaVinci Commerce landing both strategic financing and an Accenture partnership, which could lift mid-cap tech names at the open today.
Agreed. And now Vertical expanding its cloud migration engagement on the back of AI-powered delivery acceleration adds another layer to that narrative, potentially boosting cloud infrastructure plays in the first 30 minutes of trading.
On the SP 500, we are watching the gamma exposure cluster around the 5,800 strike, where open interest is heavily concentrated, meaning any gap up at the open could face resistance from dealers hedging short calls.
The Reuter Finn acquisition of an investor relations firm is a quieter story but signals confidence in capital markets activity, which could provide a modest lift to communications and financial services names heading into today's session.
An IPO, or initial public offering, is when a private company sells shares to the public for the first time, allowing everyday investors to buy ownership in that business.
So basically, the company is opening its doors to public investors and getting listed on a stock exchange for trading.
Exactly, and today we have Metals Royalty Co. Inc. making its debut on the NASDAQ capital market under the ticker TMCR, offering over 55 million shares.
The offering price has not yet been set, so traders will want to keep a close eye on that number before the opening bell.
Looking at the SP 500 with spot at 6,598.6, the nearest strike drawing the most attention is 6,630, where calls exploded by over 25,000% day over day to 3,784 contracts. On the put side, that same 6,630 strike saw open interest surge 134.75% to 5,634 contracts, which is an unusually aggressive build on both sides of a single strike so close to spot.
That simultaneous call and put buildup at 6,630 looks like traders are positioning for a volatility event right around that level, possibly bracketing it as a near-term pin or breakout trigger. With max pain sitting much higher at 6,730, the gamma exposure around 6,630 could act as a magnet or a ceiling depending on how market makers hedge into the close.
For support, the 6,630 put open interest surge suggests that level is being defended, making it a likely intraday floor if spot drifts lower from current levels. On the resistance side, the call wall at 6,630 combined with the much larger existing open interest at 6,750 on the call side creates a layered ceiling between 6,630 and 6,750.
Traders should watch whether spot can reclaim and hold 6,630 as confirmation of bullish continuation toward max pain at 6,730. Or if the heavy put open interest there flips it into resistance. The put-to-call ratios across March, April and May expirations all sitting above 1.25 reinforce an underlying defensive tone despite any short-term upside attempts.
Looking at the SP 500 this morning, spot is sitting at 6,598.6, just below the gamma flip level of 6,629.8. When price is below the gamma flip, dealers are in negative gamma territory, meaning they have to sell into weakness and buy into strength, which amplifies price moves in both directions.
That is a key dynamic heading into the open, and the call wall at 6,700 acts as a ceiling where massive call open interest creates dealer hedging pressure that tends to slow or reject upside momentum. Think of it as a magnet that also repels price once it gets close enough.
On the downside, the put wall at 6,400 is where the heaviest put open interest concentrates, and dealers long those puts will hedge by selling the underlying, so a flush toward that level could accelerate quickly given we are already in negative gamma exposure territory.
The setup for the open is that we need a reclaim of 6,629.8 to flip dealers supportive and stabilize the tape. Otherwise, expect choppy and potentially volatile two-way action between the put wall and the gamma flip as 0 days to expiration contracts reset the battlefield today.
Let's look at the levels where institutional players have concentrated the most liquidity. In the annual analysis, the dominant level is the 6,721 level, above current price, with maximum liquidity concentration over 27 sessions.
These levels represent zones where the highest institutional liquidity has accumulated over the past year, making them key support and resistance areas for SP 500.
Over the past week, the level with the highest active liquidity is the 6,715 level, above current price, with maximum liquidity concentration over 3 sessions. Recent activity confirms strong institutional interest in this area.
When price approaches these levels, watch the market's reaction closely. These are zones where major players have left a significant liquidity footprint.
If you want this level of market intelligence every single day, join Dark Gamma. We have bots that do all of this automatically. Whale levels, institutional positioning tracking, bullish and bearish opportunity scanners, and real-time gamma exposure.
You also get access to options contract levels for any ticker, ready to paste directly into your TradingView indicator, exactly where institutions are positioning. Objective data so you can make your own informed decision.
Dark Gamma is built for serious traders who want to operate with the same information that moves the market. The link is in the description. See you inside.
If you want this level of market